Great to have you.
Thank you. Great to be here, Laji.
Yeah, so I guess good news, oil prices coming down right there in the global market.
Yeah.
Bad news for government revenue. Supposed to be good news for fuel prices, but fuel prices are still elevated. What's the disconnect here?
I think let's start off by unpacking the trend in global oil prices and how quickly this downward trend we're seeing will translate to the Nigerian market. So the numbers that we're seeing right now, oil prices, at least Brent crude is still over $60 a barrel,
Yeah,
right?
still by a thread at this point.
Exactly. But I remember the last time I came, I did say that there's a likelihood of it dropping below $60 per barrel.
Right.
And we're clearly seeing that trend happen. What we know is triggering this is weak global demand and oversupply concerns. The markets are definitely pricing in OPEC countries increasing supply, and especially Saudi Arabia. And we've even seen Nigeria also, increasing its supply, and how that is, definitely impacting the global oil market. And the tensions between the US and China also was seeing that, move the market a little bit, and sanctions on Russian oil. Now, the disconnect that you mentioned is the lag between when this happened and when it's definitely going to take effect in the Nigerian market. Remember, commodities like crude oil are bought in forward contracts, right? So what that means is that this price we're seeing today is the spot price, not the price at which crude oil was bought earlier in the year or even earlier in the month, right? And what we are using today was crude oil that was bought some 2 weeks, 3 weeks, almost months, ago, when oil prices were above $60 per barrel. So we also know that there is a time lag for when this happens and when that translates to lower fuel prices in Nigeria. And typically right now that is about 2 weeks to a month. So meaning that this decline that we're seeing, it will take some time, but relatively between 2 weeks to a month.
But before December.
But before December, we most likely might see that. And a very good pointer as to how quickly or how slowly this decline in global oil prices we're seeing will translate to lower fuel price in Nigeria was when Dangote Refinery actually started off earlier in the year, where we saw that decline in petrol prices, and how, it took about 2 weeks from when the decline in global oil prices happened, and when, obviously the refining, and then when prices, eventually fell in the domestic commodities market.
All right, and definitely this has an impact for inflation numbers we're supposed to see for this current month that we'll see next month.
Yes.
So we might see an uptick since fuel prices are higher this month.
Yes, I mean, two things, right? The inflation numbers that we're going to see are inflation numbers for October, right? And when the NBS actually does the survey, that survey happens in the first 2 to 3 weeks of the month. So what that means is that the stable prices we saw at the beginning of October will most likely be what's reflected in the inflation numbers. So most likely, and that most likely will overshadow the uptick we're seeing, the uptick in fuel prices that we are seeing towards middle of the month, getting to the end of the month. But to be very honest, we are seeing that we're seeing 920 right now.
Right.
So what that means is this is just October 20, right? It might have an impact maybe on the month-on-month inflation numbers, right? But not the headline. And month-on-month inflation numbers, because again, like I said, first 2 to 3 weeks of the month. So this uptick that we're seeing right now might reflect. But if we're going to see any uptick in headline, if we're going to see any uptick in the inflation numbers, it will be on the month-on-month inflation numbers. So that's one thing to actually note, because month-on-month is more of what we're seeing as of the price differences between last month in September and October. But on the headline level, inflationary pressures are still most likely to remain low, especially because of the rebasing. Remember, at the end of as of October last year, inflation was still high, right? Still around 30%, over 30%. So that means that the base effect is very high, and of course, that's going to net it off going into October 2025 this year.
Right. All right. Well, we're seeing movement with cocoa futures.
Yes.
About $5,882 per metric ton. That's down by 0.24%.
Yes.
What's driving sentiment right there?
I mean, almost the same as crude oil prices. Right now, we're seeing West African producers, an increase in production from Ivory Coast, from Ghana, even to some extent from Nigeria. And this has been largely due to unfavorable weather conditions. The rains are falling. The cocoa pod diseases are beginning to reduce, especially in Ivory Coast, because that has been a significant driver as to the decline in supply and even exports. But we're seeing situations around that reduce, and that's supporting sentiments around the cocoa, supporting market prices. However, because cocoa is a significant export commodity for Nigeria, these low prices, of course, means a decline in export earnings from here for the country. And of course, it definitely spotlights the intricate need for value addition in this sector. So we have seen an increase in like cocoa butter exports, but of course more can be done here.
Right. So it almost seems at this point, seeing that oil is on the downtrend,
yes,
cocoa on the downtrend, gold still at record highs.
Yes.
At this point, it almost seems we should be exporting more gold at this point.
I mean, it's not a bad idea at all, especially when
accumulating more gold.
Of course. So I think either way it works. If you're exporting more or you're accumulating more.
Right.
If you're accumulating more, like what we have seen with Ghana, will most likely be the case for Nigeria's exchange rate and inflation story. Even with Egypt as well, we're seeing, as a matter of fact, Egypt, South Africa, Ghana, top African markets like Nigeria, peer countries for Nigeria, we've seen them significantly increase their gold reserves accumulation. Ghana actually, on a year-on-year basis, their gold reserves have actually increased by 130%. So what that tells us is there's a lot of buffer, and especially because of the uncertainty around the global environment, which global economists and even economists like myself believe would still linger, at least for the medium term, 2026, 2027. What that tells us is that the appetite for safe haven assets will still remain strong, and so gold prices are likely to still remain very strong. Goldman Sachs actually predicts that gold prices are going to remain over $4,000 per ounce heading into 2026.
Right, and I'm sure some investors will be wondering what the top is, for gold, or maybe when there's some kind of certainty, that might actually point to the top, for gold. We'll definitely be watching out for that. Thanks so much,
Thank you,
Dumebi Oluwole, for giving us the details of what's playing out with most of his markets. Thank you.
Thank you for having me.